All right, what's up, everybody? This is the Tuesday 10X interview. I've been doing this for over 15 years. And the theme of the Tuesday 10X interview has always been one thing. Like, I want to put on the best sales meeting in the mortgage industry every single week. And today is Jason Mitchell, number one real estate professional in America. I have interviewed Jason multiple times. We've become friends. We've had meals together. Guys, who you see on stage is who you get. Like, first of all, he's a super authentic leader. He's not only a relentless, incredible operator in terms of executing systems and processes, but he's a really good human being. At least that is my opinion of you, Jason. How you doing, brother?
I'm doing well, thank you. World's number one dad. We can add to that one. Hopefully, that can be
All
my
right.
number
Well, I
one
don't know,
favorite.
man.
Great
I think I'm number I think I'm the number one dad.
I'm just kidding. It's really good to see you, Dave. Thanks for having me on.
Yeah, well, I knew you before you were the world's best dad, and I see you on social, and it looks like you're just living your best life, man. Congratulations.
Thank you. Yeah, it's great.
Yeah. So I want to do a couple things, because this is not just, in my opinion, just another year in housing. Whether it's you're a mortgage professional, you're a real estate professional, you're seeing the two industries come together, mortgage and lending. By the way, any mortgage executives or real estate executives are watching this, you've got to be at the gathering. Housing Wire puts on an incredible event. It was truly one of my all-time favorite events to attend as an executive. And part of why it was one of my all-time favorites is you had executives from the real estate industry and executives from the mortgage industry. And we need to come together. We need to talk more. Any thoughts on that?
Yeah, of course. I mean, look, it's all coming together. It's been coming together for quite some time. And I mean, Dave, when I first met you a long time ago, one of the first conversations we had, forgot what hotel we were at, but we are at a bar somewhere. I know Renee was around. And I was talking about how our business model is very unique in this space because we work directly with lenders and are a servicer to a lot of large lenders in the B2B space, and that the future of real estate will be done through lending, not through real estate. And when you think about it right now, with the major acquisitions going on, number one being Rocket and Cooper, it's all happening in controlling the funnel. What we've always talked about was it's so expensive to manufacture a consumer that you can't just have one core element driving revenue. And as the margins get tighter, both on the lending side and the real estate space, we can talk about commissions and spreads. The large organizations now are driving business channels through a variety of segments. And so that's real estate, lending, insurance, search, all these organizations now that are bringing the eyeballs to consumers, which are expensive, and get them to raise their hand. They're now owning the entire consumer channel funnel. And it's not going to change anytime soon. Now that we have, really in real estate right now, you are really seeing a lot of mom and pop organizations and small brokerages hurting significantly. In fact, you would argue even a lot of the large ones are hurting significantly because there's not a lot of transactions. And what real estate's become is a play to where agents want so much in terms of the commissions and the monies that are earned on a commission that the margins for a brokerage are so slim. And it's really hard to turn a profit just through traditional real estate brokerages. You have to find other ways to create money. And in order to do so, you're now seeing the evolution of the real estate agent becoming a licensed loan officer on transactions, which I don't know if that's good or bad for the industry. You're seeing these businesses now have their select agent networks, from the Zillows to the Rockets to the Veterans United, you name it. They want trusted agents, and they need trusted agents because, especially when it comes to purchase, what's always held true is that if you have a purchase consumer out there that's looking to get a mortgage and you're writing that loan as a mortgage banker and you allow that consumer to go find their own realtor, that real estate agent is going to say, I'm sure so-and-so is great, but you should talk to my guy as well. And so that's where the deal breakage becomes paramount, where we have to have trusted real estate professionals that when we take an application, we are referring them to our trusted real estate professionals who are taking them through the process. And in addition to that, if the consumer can get rewarded, all the better. That is that is the flavor of the market, and that's going to continue to be a massive part of what's going on. In my world, you have Zillow that owns search, you have Rocket that owns mortgage, and really these two companies are colliding, as I had thought they would many years ago, to be the dominant players in the entire space in the transaction. That's not going to change. So the question becomes, what must we do to, one, either join forces, or to defend against that, to protect our own local interests? And I think there's a lot of things that can be done, but the other side of it is, think about what is being done and can you do that on a local level? That's the key. Because if you can, when you look at these organizations as an example, Dave, when you talk about creating a lot of revenue, we're doing a lot of deals right now with regional lenders and institutions that buy purchase leads or have purchase consumers, because they are now getting licensed as a real estate entity and receiving referral commissions on those transactions. And now all of a sudden, when you close a deal, instead of you just worrying about what your spread was on the loan, you can now take a point on the real estate commissions, which completely enhances the ability to manufacture more business, because now that fuels the marketing capabilities. And so if you're not earning money, if you're in purchase and you're not earning money on the purchase, meaning the real estate commissions, I'm telling you, your competition is. And it's something that you really have to start as a consideration on how to do so. We are a partner in this with many organizations that help facilitate the licensing and the platform in order to do so, and the trusted agent network to have it. That's really what we specialize in at JMG, and Home Advantage. But if you're not doing that, you're really doing yourself a disservice, because you're leaving not only too much money on the table, but you're also taking away, Dave, from creating organic relationships for your loan officers. Every time a referral goes out from a purchase in a purchase space, that's one more opportunity you have to work with a real estate professional that you've never worked with before, who can hopefully have a great experience with you and send their business to you in the future. So it's just something that is only going to get bigger. It's part of this consolidation thing, Dave. And you're on the forefront of so much of this because you know everybody. The M&A space and consolidation is just getting started. This is going to go on for the next 18 to 24 months, where there's just going to be so much shrinkage in terms of how many businesses versus, like, who's falling now under whose brand and or umbrella.
So we could do, first of all, that was a great setup to this conversation, the future of lending. I want to test a few theories I have and strategies, because most of my companies, while I have consumer direct, either companies or groups, like a Prosperity Home Loan, we help both their local purchase focused groups and their consumer direct group. But I really want to focus this on helping the local professional future proof their mortgage experience. And so tell me if you agree with this, that if you are local, whether you're a realtor who, you're most concerned about Zillow. And by the way, guys, Zillow is just getting started with what their mortgage strategy is. They're already one of the fastest growing mortgage companies, and they're, they haven't acquired a big player yet, but it's probable and possible that they will. I think this applies. And if you're a local mortgage professional, you know what Rocket's doing, your biggest threat, Rocket's a threat, but your biggest threat are the local provider in your market that is upgrading their practices. They are putting systems in place, they're putting processes in place. I just got done interviewing a top producer in Columbus, Ohio by the name of Daniel Saw, that's just killing it. Like his average LO closes 6 loans a month, but they use MortgageCoach with every single client. They are rocket proofing their mortgage experience. What are your thoughts on the biggest threat is those local providers that are upgrading? Like if you're local, that is your biggest
Well,
competition.
yeah, I think local can always be, Rocket has a local approach. Um, you know, when you talk about like just saying that word rocket, like depending on your size and how your operation is, I wouldn't even worry about it. I wouldn't worry about them. They're going to do what they're going to do no matter what you're going to do. I think what Dave is saying, and I agree with it wholeheartedly, you can always win local. You can always win local because it's real, it's feel, it's touch, it's come on in, it's I'll meet you. Like that will prevail over any big box brand. It will if you're operating it efficiently and effectively versus the other local competition. Because the other local competition is truly your competition, not Rocket and not the big players in the space. It is having the ability to, from a local perspective or a regional perspective, being able to be more warm with the client, more at home with the client. And in order to do that, I really believe, especially in purchase, you need to be more warm and closely with the local real estate community. You know, one of the largest lenders out here locally is so good at real estate relationships that they just have hundreds of agents because they cater to them and that's who they go to. So when an agent has, and it's not about they're giving business away, so we want reciprocation. It's about they just take care of the community. They host events, they put things on, they spend money to drive community efforts for local real estate professionals. So those local real estate professionals say, that's the best team in all of Arizona, in all of Scottsdale, in all of Phoenix. They just dominate the local approach. And the more that you have these real estate professionals on your side, the better you're going to do. But the question becomes, how do you go about doing so? Because the one thing that you can't do is you can't spin your wheels on trying to add value to real estate agents that simply aren't doing real estate. You know, like this is not a shotgun approach. This is a rifle approach. And I can tell you the biggest secret to that is it's not the brokers and it's not the agents, it's the team leaders. The more that you can get in front of real estate team leaders, the more opportunity you will have for their entire agent population. So creating the relationships with the teams is really something in the local markets that I would consider, not necessarily onesie twosie agents. I would consider more, hey, who are the dominant real estate teams in the market and how do I create value for them? Because this is an approach where it's what can I do for you first, not what can you do for me. That's always been my mentality in building our business was how can I be the best partner to somebody else? What can I do first? And then hopefully I have an opportunity in the future. If we lead with our value and stay consistent with that, then you will get the at bats, you'll get the opportunity. But I think local is a much better way to position yourself in terms of competition on what is the person down the street doing what are they doing better than I am? What are you doing better than what they're doing? And start understanding what the value props out there, out to the real estate community. And of course, consumers, but consumers are derived mostly from your real estate community for the most part. And then if you're driving in purchase business opportunities to have those relationships to give back to the real estate community and those that are producing and those that are building relationships with you, that is an added value prop that I think you should certainly have in your arsenal is the ability to help your team grow and do more business from a local approach.
So here's what we're going to do, guys. We're going to get into some specific strategies. If we've got over 160 people live, and I'm sure a lot of people, thousands are going to watch this on YouTube. So put your questions in chat. If you have questions, we will have time for some questions, and I'll bring them in. Also, if we say something you just think is the big takeaway, feel free to use these little reactions. Give me a thumbs up, everybody, just to make sure you're all paying attention. Use that little reaction button at the bottom. And feel free to use those since we can't see your eyes, we can see those reactions. Feel free to use them. Thank you everybody for playing the game. It looks like you're awake. So I think at the highest level, if you are a local realtor or mortgage professional, to win locally, you need to win your database and you need to win your zip code. or your city, whatever that geographic area is. Do you align with that? And then let's start unpacking how you could do both, like tactics that we can do to win both. Anything you want to add to that, or do you agree with that?
Well, I agree, but let's start thinking out of the box. The B2B approach, meaning, can I work with organizational levels? How can I build this value prop in the community and not just rely on the real estate funnel? When I started building JMG, and again, this is my experience. I was so local. Everything was local. And over the past 10 years, we've turned it into national partnerships and the things that we have, but everything was local. I was working with local accounting firms. I was working with local apartment buildings. And what I was doing is I was offering these real estate rewards to consumers. And in the cases where the partner that gave me the opportunity was licensed, I could share in the referral, I could share in commissions with the real estate side of things. And that led to more and more opportunities. And then it led to us building our systems out to where we were really effectively managing partner accounts. And you fast forward from maybe 11, 12 years ago to this little business model that we had. This year we'll do close to $70 billion in referral volume. That's in a decade. And I say that because it can be done. And not only can it be done, I'm living proof it can be done, because there's nothing I did that was special. There's nothing that I have every day that's special. I don't have a crazy college education. I didn't go to an Ivy League school. I went to a MAC school. I grew up poor. I mean, I am living proof that if you stick to a plan with consistency, it can work. And it doesn't have to be on a big national stage. It can be local, because I started local. And when I say partnering with businesses and partnering with organizations, how can you, as a loan officer, create value to anyone that has a consumer population of people? So whether that be local businesses that have a couple hundred employees, how can you institute a lending program for them to where anytime one of those employees purchases or refinances a house, they have some sort of rewards that you're offering them? Meaning credits to the loan, whatever it is. How can you partner with, like I did, apartment complexes, to where all of a sudden, if somebody leaves as a tenant and they go to purchase, you have a reward program for them. Accounting firms, divorce attorneys, there's local charities. We partnered with one of the biggest churches in 2016 out here. And their congregation had thousands of people. We probably did 120 to 150 deals a year just through that congregation. And it was because what we did is we made a donation to the church on every single transaction that we did, and we gave credits to the consumer when they used us. Once it starts to snowball, and once people start talking, like for example, in business, when somebody, if you are representing like an HR rewards program for those companies, once a couple people start using the program and they have a good experience, people talk. And that was the same thing that happened at the church, because after I did like 7 or 8 deals, all of a sudden I was getting calls like every week from people there that are interested in buying or selling. And then all of a sudden I took the whole back page out of the church, and every single week there I was, but people were talking good about me. And so when I say that there's ways to do this, if you start thinking outside the box to build the channels, because channels are important. You have a real estate channel where you're working with some of the top real estate teams and top team leaders, and individuals themselves. You have the consumer direct channel, which are your past clients. Dave always talks about the database. I'll tell you that, like, that's a channel. And then the channels of B2B, that past database channel. I just did a YouTube video on this like a month ago. And because I always, when I do go on stage, some of the questions are, where would you spend money? Everyone wants to prospect. Everyone wants to buy leads. And that to me should be secondary to spending money on your database, because the people that you've worked with in the past are the ones where the gold is found. They've already had a good experience with you. They like you. The problem is we don't pay attention to that piece as much in terms of capital and spending time, effort, and money on the past clients, when the reality is they all know somebody too. But we set that aside and we only focus on the front end, where the back end is where the gold is. Like, you always need to prospect and drive new clients into the book of business. But the past clients are where the gold is. That's where we've already spent money. We've already spent money on these people in some way, shape, or form to get the opportunity to do business, have done business, had a good experience. And yet there they go. They go off to the wild. They go off to the wild to where next time they see an advertisement from a rocket, they call them because they haven't heard from you in 2 years. Like, that book is so important to spend time on every single month. What are we doing to stay in front of these folks? And those that actively engage that book are the ones that are constantly growing. So that has to be a channel. If we start taking our mindset around everything's a channel of conversion. So the channel is B2B, real estate, past clients. If we focus on those three channels and break those up into subcategories of how. So past clients, how am I going to market to them, and what am I going to stay consistent marketing them to? If I want to go biz dev for business opportunities, what is the business model and how do I stay consistent with messaging? And then the same thing when it comes to real estate team leaders and individual agents. What's the business model and how do I stay consistent? Because you have to have the plan and then you have to have the follow-up. Those that take time to build this stuff are the ones that will win. Now, I'm not saying you have to do all three channels at the same time. What I'm saying is, as an example of channel business development through channels of operations, we like take those three channels and find ways to create a business model in one of three or all three. But you also have to have execution and follow up. Like, what does that mean? So I'm going to go out and have a dinner with somebody that is head of HR or a vice president of something to say, hey, I want to offer something to your employees where they can save thousands of dollars. I want to then go out to real estate team leaders, what I'm going to do for your clients, right? So here's the business model. Here's the plan of action. And then you have to follow up on biz dev because you're going to get, I get told no more than I get told yes these days. I don't care. It doesn't matter to me. I get a yes, that makes my month, right? So, but once you get a yes, as long as you're executing well and you have good customer service after that, you'll never lose that account. That's just now an account that falls under account management that now you're paying attention to month over month to service that account. This is all servicing. It's all account management. Go ahead, Dave.
Yeah. So what do you tell me if you agree with this? And so the case I've been trying to make is to execute at the highest level of efficiency with your realtor partners and to execute at the highest level of efficiency with your B2B partners, which there's many. Your database is your number one priority because if you are truly delivering that mortgage coach experience, showing people how to build wealth with real estate at scale, if you are using data in predictive ways of who's eligible, who looks like they're going to move up, who looks like, hey, they have a kid that could be a first-time home buyer, who looks like they need to consolidate debt. And we call it automated coaching. One of the things we're doing here at Trust Engine is we're actually using data to create that mortgage coach experience. Like, if you're a loan officer that does that at scale, one, you're going to be more valuable to realtors because you're not just doing transaction. They'll look at you and see how you're better serving their consumers, and they'll see that you'll be a referral multiplier. And then the actual mortgage coach experience has a higher level of value. So if you're an employer or you're, the head of a large group, knowing that your loan officer is doing more than quoting rates and fees, and they're actually helping people make informed decisions to build wealth with real estate, that's a value. That's a service. So what are your thoughts on literally if you're watching this right now and you're either a executive level leader of local loan officers or you're a branch manager of local loan officers, executing that data strategy and elevating the level of service beyond a fee worksheet is the North Star. Like, it's the number one thing you need to do in order to execute effectively these other strategies. Thoughts on that?
Yeah, I do believe, though, that just has to be part of a core competency. The- You know, people that execute to where it's sporadic never follow suit in terms of process. Like, I don't know how to express this in the sense of saying like everyone wants to try something, but the consistency behind it is where it fails. Like staying consistent at something is the holy grail to ensuring that it can be successful. And sometimes you'll try something and it's not, but part of that process just has to follow suit. It has to follow suit with the follow up. It has to follow suit with what like the tools and assets that are being provided. But it's being done through a technical means to where somebody's just managing that workflow of the process. And it takes the focus to build out the project. So when you put a project board together and you say, look, this is the project, this is the goal, these are the people that it's assigned to, and these are the deliverables when they're due. And then after that's done, now it's the management of the project to ensure that it's actually working and being effective, the optimization of the project. So when you start thinking of how am I going to deploy a strategy, you divide it into two phases. Phase one is definition and execution of the rollout. And then from there, it's optimizing what you've put into play. So the two sides become critically important because you have different people working on both sides. You have the project team, and then you have what would be the person that's in charge of the project for the future of the project to make sure that it's actually working and building reporting around making sure that it's working. Are we getting people to raise their hands? Are people engaging with the assets that we're sending them? And if so, if that trend report is telling you every month it's getting better and better, something's working. But one, I mean, I'm looking at the chat here and I see our good friend Brian, who's awesome. I mean, when you talk about FinLocker and what Brian's built over the years, right? He stayed so consistent on building this thing and hyper focused on next phase, next step, next phase, next step, process, rollout. What are the like everything that now all of a sudden he's created a national brand for their organization. But the problem is most people want to try something for 2, 3, 4 months. And if it doesn't work, on the next thing, on the next thing. That doesn't work. What works is consistency. What works is consistency. What is your niche and what are you really good at, and exploit that. But so many people want to just say, well, I tried for 3 months, I attended open houses with realtors and I only got one deal. It's not worth my time. Okay. Maybe it's not worth your time, but also maybe you're just getting started, right? Like when you talk about the delivery of like a mortgage coach product, that should be the ante to play at this point. Like that should be a strategy where every single month, like the assets are being deployed, somebody's managing those assets, somebody's paying attention to who's looking at them so they can give them a call or shoot them an immediate text. Are you considering refinance or a cash out? Like you got to build the bells and whistles around the awareness factor of that project too. But so many people just try things and they find themselves spinning their wheels in circles so many times because they don't stay consistent with what they're trying to build. I don't know. I mean, not everything's worth its time, right? Like not everything's worth saying. I turn down a lot of things these days where people will have an idea or a concept. And I'm like, can't focus on it right now, but it's a great idea. Might be a great idea. Can't have my focus. Like your focus and your time as the business owner, as the leader, you have to pick and choose your battles of what you want to spend your time and effort on, because that stuff is what prohibits potential really good building going on versus I spent 3 months on something that was a complete failure and was a complete waste of time. As you get older and as you get wiser in business, you start to realize how valuable your time is and the value that the people that work for you, their time is, because they got to help you with the projects. So it's also important to pick and choose your battles on what you want to get started and not look at every shiny object and think like that's the holy grail, right? Like being very thoughtful about your time is very important.
All right. Jason Mitchell is talking how important it is to win the database. If you win the database, you can win local. But if you're an executive or you're a manager, your loan officers have to adopt. And so here's our playbook at Trust Engine. To get loan officers to adopt at scale, first of all, they want more loans and less effort. So you need to build a product and an experience that delivers that for loan officers. Here at Trust Engine, we're using data insights, and then we're automated coaching. We're using the insights from data to say, hey, mortgage professional, Here is what you should present to the consumer right now, whether that's a move up, a move down, buy before you sell. Hopefully, we'll see rate and term refis, automated mortgage coach, integrations with technology like their LOS, Encompass, Optimal Blue. But you have to, if you're going to get impact at scale, you need to integrate with the technology. And then the coach to coaches program. So this is what we have right now where we are running specific training and coaching with branch managers. Because if you're going to change local loan officers, you need local managers to lead by example. And then guys, you got to have gamification and scoring. Loan officers love to compete, and so you need to gamify it. So this is our formula. If you want to learn more about how we're getting LO adoption here at Trust Engine with Mortgage Coach, reach out to me. Either DM me, request a demo at mortgagecoach.com. And if you're an individual loan officer, you can sign up online at our website. A link down below. Let's get back to Jason. Let's go. So guys, we just hit the halfway point of today's top sales meeting in the mortgage space. Use your reaction. Let us know what you think of the session so far. So we've got over 170 people watching this live. Last year, the most watched video in the Mortgage Coach YouTube channel was when I interviewed Jason, literally days after the announcement of the NAR settlement. And that video has been viewed over 39,000 times. So Jason, thank you for that leadership. I want to ask a few more tactical questions, and then guys, in the fourth quarter of this, Q&A. Like the more questions you give us, the more we'll focus on your Q&A as we go into Q4. So Jason, one of the strategies that I believe in a lot, and again, part of my mission is to change how people get into debt in America so that they not only have homeownership, but they have financial freedom with homeownership. And I think Mortgage Coach and the technology between the data we have at Trust Engine and the automated coaching that we're driving, I think that's a part of the piece of the puzzle. But I think another part of it is how proactively and aggressively both mortgage and real estate get into first-time home buyers. Like at the end of the day, the race for home ownership starts at the age of 18. That is where you can get yourself in credit card trouble. And that is where you should know how credit works, and you should know how home ownership really is the front line of the wealth gap in America. And right now it's taken 20 years. The average first-time home buyer last year was 38. So it's like a 2-decade-old race that's being played. And it used to be about a decade. It used to be about 28 to 31 that people would achieve homeownership. And part of my mission is we got to get more people in their 20s into homeownership. And I do believe with the amount of equity that we have in America, the amount of down payment assistance programs we have in America, that truly proactive education and making sure that everyone who rents kind of knows how the game is played is the path. I mean, too many people still think they need 20% or 10% down. So one of the things I'm trying to do at a mission level is, one, be a mortgage coach, be a data-driven mortgage coach. Two, FirsHome IQ, nonprofit. Let's do a better job of educating communities around how to get into homeownership in their 20s. Any advice you have? Because there's a lot of people on this call that are mortgage coaches already, and they are also FirsHome IQ ambassadors, and they want to be more proactive. They want to be this first responders of the financial literacy crisis. Any advice you have?
Start a project. That project, to me, like immediately it goes to the project is awareness and understanding where an audience is, because you can't just shoot blindly. There's too many people. So the project is finding our audience. So if our audience is first-time home buyers, where do we look? What are the best places to look for first-time home buyers? And once we have identified a few different segments of where we can target by demographic, then we start to put together the marketing plan for that. So for example, like not every apartment complex is synonymous with what will be first-time homeowners, right? Like some apartment complexes or communities, call it, where people are renting are for people that are 55 plus. Well, that's probably not the audience. They're maybe done with that phase of their life. But for example, I live in Scottsdale. Like there's a part of Scottsdale that is notorious, has younger professionals in several of these apartment buildings. That's probably a good audience, but there's also businesses that can give you those demographics and information. And so if our main goal is targeting first-time home buyers, then we have to find data. And then it's once we get the data, how are we going to market to this data consistently and effectively, but also paying attention to how much money is that going to cost? So, when you talk about email marketing campaigns, are they effective? From an awareness perspective, maybe. From an application perspective, maybe not. But if I see it in an email and then I see it in a postcard and all of a sudden there's an event down the street once a quarter, like there's ways that we drive messaging with little cash outlay. And then there's stuff that we do that are more heavy cash outlay. But it's really up to how you want to position like the marketing component, but you can't, like the reason marketing gets so expensive is because you're just doing it blindly. When the marketing is a more targeted approach to what you do, your marketing simply becomes more effective because you're hopefully hitting a better audience. And then we have places like social media. Like, what are the groups on social media that we might be able to sponsor or be a part of and really drive our message of what we're trying to get across? So, I mean, again, it goes back to like build a project, build a plan, and start executing on the plan. The more you start with the goal of the project, the more the subcategories of the project come into light of what you need to build on. And then once the assets are built, then you deploy assets and then you start tracking the results. But that's, to me, when you're talking about finding more first-time home buyers, the starting point is being more strategic with where to find that audience.
Yeah. And being more intentional around creating the demand, I think Jason Mitchell, he added database, but guys, your database is the North Star and your database is full of people that if they have a home, they've probably got a lot of equity. And if they have a home and they have a lot of equity, a lot of those folks have kids. And by the way, they want their kids to achieve homeownership younger. So I do think we need to do a better job of just creating demand. I just put a link to the FirsHome IQ Quiz. This is a free, takes 2 minutes, 5 minutes. When people in the industry take it, usually they get a 90% to 100%. When Gen Z takes it and they don't own a home, they're usually in the 50%. Start being more aggressive at educating the next generation. Anything else around first-time home buyers before we go to some of the other topics I want to hit? Any other ideas or suggestions?
On my side, like I said, it really there's general questions on that, but from a broad perspective, like I said.
Well, let's go to this chapter now.
Yeah. I mean, like, guys, the real key is just get busy and do the busy work. Like, if you do the busy work and you do the stuff that isn't fun, it's amazing how it turns into fun. Like, what I always tell real estate professionals is, if you're out touring homes with somebody, or if you're going on a listing appointment, that's the game. But the practice is, what did it take to get that opportunity? And the problem is most people in our industry don't practice enough. They don't do the busy work. The busy work's the practice. You got to be willing to every day build on and do that busy work so you can play the game.
So let's go to this chapter and really close around this. And remember, guys, there's lots of you on here. Put your questions in here. I want our community of mortgage coaches to be like essential to local realtors, be as valuable as they can. So when I interviewed you last, it was on the heels of the NAR settlement. And it was one like, hey, mortgage professionals, realtors need you and they need your help. They need your empathy. And we talked a lot about how to show up empathetic as that was happening, how to show up valuable. We're now a year since the NAR settlement, and I don't know how much that is a topic. CCD is a big topic. M&A is a big topic. What are the things that mortgage professionals, because most of this audience is mortgage professionals, what are the things they need to know to be valuable and empathetic to the realtors in their local market, in your opinion?
Well, over the past year, the greatest milestone that is a new milestone in terms of paying attention to is buyer broker agreement executed. When that is done and you're communicating well with a real estate professional, that is your trigger point to stay hyper focused on that client and follow them and pay more attention, have more touch points, have more trigger points. Because now they're in contract. They're going to buy something, most likely. They're going to buy something in a short period of time. That milestone never existed until about a year ago. It was more, if a real estate agent wanted to get them under a buyer broker agreement, it was always suggested but never required. And the reality is that point of your real estate agent making you aware that a buyer broker agreement has been executed has never been more important than it is now. Now, this is on purchase. Because now you got a client that's ready to go. And of course, if that client was originated on your side of things and you had referred that to one of your trusted real estate partners and you guys are working off the same system, all the better, because you get that trigger point when the milestone's updated. That's why being able to have a platform to run your purchase model through becomes so important. So you have visibility on where the client stands with the real estate professional that's going to help you close that loan. That, like, the platform is real. Like, being able to run your purchase, not through you just emailing somebody or texting an agent or sending them through and then having to follow up. Hey, did you guys go look at houses last week? Like, that is so inefficient. Like, the platform can do all that for you. That's what our Home Advantage platform does. That's why we service so many lenders and that sounds like a selfish plug, and it is, but it's also true, because your purchase platform, if you're running a handful of LOs plus, the manager of the LOs, the sales director, has to be able to see where the pipeline sits with each of the loan officers when it comes to purchase. And if you have trained, vetted, true blue real estate professionals that understand communication is key, and these are the milestones to update as you work your way through. Also, things like they might be shopping you, put an alert in the system. Hey, it's shopping with their local credit union. Like, that communication portal for purchase is so important. So you know where things stand. And that's why the disconnect now is the phone, because no one wants to pick up the phone. So how do we find means of communication outside of having to make a call, right? But many people still rely on the phone to get their updates. That's not efficient anymore. People are moved too fast and they're too busy. We need a system. You need a platform to run your purchase model through.
One of the things that we're seeing a lot from the mortgage coaches I'm interviewing is how can a loan officer help an agent either get a listing of a move-up buyer. A lot of people have 2%, 3%, 4% mortgages. I recently interviewed a loan officer in Dallas, Texas, doing 100 million. And one of the things she's doing, and there's some agents that actually are saying, hey, will you do that for one of my listings? Is where she says, hey, here's your current home. Here's what buying now looks like, and the price buying now. Here's what waiting for rates to come down, because a lot of people are like, oh, I'm going to wait till rates come down. Well, hey, when rates come down, values go up. What does that look like? And then what if you can always buy now and refinance, and she's able to show like the net worth growth and really make a case to the consumer, like get the consumer financially fired up about listing. And then another one we see a lot is buy before you sell, showing complex strategies like, hey, here's how you could buy now and before you sell your home, so you don't have to make contingency. What are your thoughts about those being valuable ways for mortgage professionals to show up and help realtors right now?
Well, I think once you get there, you're going to look like a true pro. There's no question. So that's great, but you got to get people there. You got to get them to want to join that discussion. So that's the driving factor of the marketing capabilities, to have those discussions. Because if I have that discussion with somebody, I'm not even shopping you. I'm looking at that going, this guy has his shit together. This girl has her shit together, right? I mean, those tools and resources that are provided there lock in the ability to say, I don't need to talk to anybody else, because the credibility speaks for itself. Like, I wouldn't go anywhere if somebody sat down, spent 30, 45 minutes and showed me that. But how do I have more of those conversations? The more conversations I have that I can get somebody on that call, or if you start thinking in mass, if I can record this discussion to give examples, 2 to 3 examples about this, and now have hundreds of people join that call. And when they're done, they click a link to get started. Now all of a sudden I can drive in more channel business, right? Like the volume of business becomes critical. And there's ways to do this in a volume world, and then there's ways to do it that's more one-on-one. That tool and resource really solidifies that. If I, like, what we should be saying is, what's my capture rate? If I host this call and I do this presentation, what is my capture rate? If 10 people go through this, am I closing 6, 7, 8? What's the capture? Because now all we need to do is, once we can measure that ratio of capture, now all I need to know is, how many people can I get in? Because if my capture rate's 40% and I've measured this over 30, 40 appointments, and I know it's 30, 40%, whatever that number is, now I can totally model my business. So now if it costs me $50,000 to drive 500 people, of which we can have this call, that's going to equate to 200 closings. Like, everything can work backwards from the capture of that conversation. Like, that's how all this works, and how we don't just spend money blindly. We look at my whole, like, what I always say is this: the goal is not, like, the goal in real estate is always to close a deal, but none of that happens if I don't have an appointment. So if I
I
have a
love
buyer's
that.
consultation, what's my closing ratio? And if I have a listing consultation, what's my closing ratio? That's where it all begins and ends. And that's the only information I need to know. So now I can talk about, what do I need to spend to get more of that? And where are my dollars best spent? Because I know if I get them to this point, I'm going to close 40% of the business. That, to me, what Dave just showed, that's the meeting. If I get you to this meeting, where does it go from there? Because now I can measure my whole business.
So let's do this, because I think this is such a big, important idea, and I would love to get your feedback. I recently interviewed Jeremy Forcier, and out of the night, he's doing about 8 million a month in production, and half of it is first time sellers. And what do first time sellers have in common? They got a lot of equity. If they bought their home 3 to 7 years ago, they have a lot of equity. And this is one, a script he's using, and then two, he's training his realtors to do the same thing. I want to just play 1 minute of this script and then get your feedback, have you do a little breakdown on this script. So check it out, guys.
You need to know what they purchased the house for, okay? And you need to know what it's worth now in the minimum, your CMA, your current market analysis. If you want to go real pro, you know what they bought it for, what the value is, and what their down payment was, okay? So there are two different scenarios. The one with the know what their down payment is, that would be like a past customer and have them call you, the lender who did the loan, or get that information from the lender that did the loan. Okay, so here's what the script sounds like. It's like, hey, Dave, it's Jeremy Forcier with a CMA real estate company. How are you? How have you been, etc. Listen, I was doing a review of people that have like done really, really well on their home purchase, and you were one of them. So when I look at it, you bought this house for $500,000, 5 years ago, and it's currently worth $750,000. That's a 50% return, like, on your investment over time. You've made $250,000 like in equity. And when I look at like what you put down as far as a down payment, it says that you only put down $100,000 on this, and it's gone up 2.5 times. So you have literally made 2.5 times on that investment just over a 5-year period. Like, I'm so happy that we could have helped you with that. Hey, let me ask you this. Are you interested in creating more wealth with a bigger asset? Like, if you bought a house that was worth a little bit more, you could just do this again and keep creating more wealth faster. Is that interesting to you?
So what are your thoughts on that?
Well, one, I like the opening, because I think the opening really sets the tone of, I've qualified, right? Like, it gave me something to say, I've done something that not everybody has, and it's rare and it's good. Like, that gets my attention. Like, attention on scripting is super important when we talk about scarcity and we talk about like the qualification factor to set the tone of the call, because where most people fail on dialing is they don't have a script that grabs attention. I mean, think about how many phone calls you get. Hey, Mr. Savage, this is so-and-so with the credit repair, blah, blah, blah. And you're like, thanks, click, thanks, click. They have just no bravado to them whatsoever. If I'm calling Mr. Savage, I'm saying, Mr. Savage, this is Jason Mitchell. You might recall we worked together here, or my name is Jason Mitchell. I'm calling with the so-and-so, like Jeremy mentioned, program. Look, before we even say anything, I just want to let you know, I'm not trying to sell you anything today. It's actually a call to let you know where you stand on your home equity, and it's a good position. Like when it's like, when you take objections out of scripting, people can't object. Prime example, if you're a real estate professional and you're going to show a home that backs to a busy road, I let you know before I show you that home that it backs to a busy road. Why? Because if you say I'm okay with what I say is, look, just to let you know, the house does back to Shea. It's very busy. As you know, it's a very busy thoroughfare. However, that's indicative of why the price is where it is, because the home looks spectacular. But I want you to know off the get-go, it does back to a busy road. Here's the deal. Some may say no and some may say yes. If they say no, I don't waste my time. If they say yes, I don't ever have that objection again when they go into the house. It's people that walk blindly into scripting is where people fail. You're setting yourself up for failure when you don't hit objections head on. And that's what I think Jeremy did really well in there, is he was like, what I would have said in several instances, if I was the consumer, I would have added a no, thank you, or a yeah, but he was ahead of the objection. And I think that's very critical when you talk about scripting, is being ahead of what somebody's going to say could be a roadblock to finish the conversation. So I thought it was a very good script.
Yeah. And guys, I just put a link to it's a clip from a full 1 hour interview like this. I put in a 4-minute clip that includes that script and then exactly how he walked them through the buy versus sell. So highly recommend you guys take that. Your realtors will love it. Links over here. Also, the sample mortgage coach presentation is there. So we got a few minutes left. I'm going to review for any questions.
Think real quick, Dave, commitment is big too. Like for your loan officers that are like, they go through the application process, they get commitment, but all of a sudden you can't get docs back. And you can't get docs back. Why? Like if you're like, every phase of the mortgage process should be followed with what's our ratios on this, right? Like once we send docs out, what's our odds of collecting docs? Because now you can get and identify, we want to get to a certain threshold. And many times it can be because we're not setting it up properly. So when I talk about getting docs out and we're saying, look, Mr. Savage, just want to let you know, I'm going to send you these docs, but like getting commitment on next phase is where I'm going with this. Mr. Savage, I'm going to do me a favor. Thank you so much. We're going to have an excellent time. How about you do all the application stuff? And like, I'm going to send you this. I'm going to send out so-and-so. It's going to have some things I'm going to need from you, including X, Y, and Z. Here's the thing. I cannot lock your loan until I have this information. And I know how busy you are. My question is, will you commit to me that you or someone at work or at home can get me this stuff in 48 hours? Because if you can do that, everything else will be a cakewalk. I'm getting commitment right there that I know I have 48 hours to get these back. And the thing is, that sounds like, yeah, I've been doing that my whole career. Maybe you have, but are the people that are working for you, are they really? I mean, a lot of salespeople are afraid to ask the question, to put it to the consumer to get something done in a timely manner. They're afraid to get commitment from a consumer on a foreshadowing of a process. Like these are things that help with capture. These are things that move things along. Scripting, like Jeremy was saying on that initial call to a consumer, scripting is important to prospect, but it's also important in the application process. And it's important to foreshadow, once I get these back, what will happen next. Like scripting is so important, but it's also not what you say, it's how you say those things in scripting.
Love that. And Richard just asked, what are some of the 1% improvements you do to improve conversion? I had asked him if he uses MortgageCoach. He does. I will tell anybody on this call that if you're not giving a MortgageCoach presentation to every borrower, you're literally diluting your conversion by at least 10%. And you're losing basis points because you're getting shot more. So that's one thing. But I would love, Jason, it would be even great. We could create a clip out of this. We got loan officers on here and they want to be valuable to realtors. You're the number one real estate platform in the country. What are things that real estate agents can do to improve scripting? Like rattle off, like if there was a lead conversion playbook and maybe call out some of the most common mistakes. We could probably do this for a whole call, but give me a little soundbite on Jason Mitchell's top things to do to optimize conversion for an agent.
Well, I mean, it all starts with scripting in terms of what's my initial call. And the initial call is all scripting and foreshadowing. That's all it is. What I was doing, and I was fortunate to be pretty successful in the field. My biggest trait was when I would get somebody on the phone to talk about real estate who was actually interested in real estate, they would be my client. I had very little fall off on that because I set the process of the entire transaction up in the very beginning. And it does not change with mortgage. It's the same exact thing. We add credit. First of all, we do our intros. We talk about where, like the basis of who and why they came from, add credibility to the discussion. Oh, I saw that, so-and-so referred you over to me. Yeah. How do you guys know each other? Oh, we work together, this and that. Every question is another question. And it's all about discovery. Oh, great. Where do you work? Oh, we work at so-and-so. Oh, is that why you're moving to Arizona? Yeah, that's exactly where I'm moving. Great. That's amazing. You're going to love it here. Have you ever been out here before? No, we haven't been out there before. Oh my God, you're going to love it. Do you have children? Do you have this? Every single thing I talk about on that initial call is building rapport, and it's building rapport through discovery. But those discovery questions, I'm just leading down the path because as you start telling me things, I'm going to start to understand where in terms of geo, what kind of home. I'm going to get in discovery about that process. But now I'm leading it up to where when discovery is over, I'm talking about them, what their family enjoys, the why behind what they're doing. But the foreshadowing is everything. It is literally everything. Because once I got that out of the way, I'm going to talk about, look, what you're looking for. I can tell you we can find it, but there's not a lot of it. And a lot of people are kind of looking for the same thing. You want to be in Scottsdale, you're looking 4,000 square feet, between 800 and a million. There's not a lot of it. And when something good hits the market, it usually goes quick. So when we do go out there and start looking at properties, if we find the right one, are you in a position to make a decision? Whoa, that's a direct question. Why am I asking that question? Because when I go on tour for the first time with those people and I show them 4 or 5 houses and 1 or 2 of them really stick out that they like, they have already had the discussion with me about pulling the trigger right now. The next step is when we go out there and, are you in a position to make a decision? Yes, great. Okay, great. That's amazing. My job is very simple. My job is to make sure not only do we find a great residence for you, and the reason that 96% of the people that I work with refer a friend or client to me is because my job is to make sure not only do you find a great home, but that you make a great investment. So I'm going to offer you my opinion and suggestions when we go out and look at properties. So when we find the right one, we're not only making sure that it fits for you and your family, but it also fits for your future and for your future wealth. Like the things that I'm adding credibility to myself as a professional, and then I'm wrapping the call up with something like this. Okay, so what I'm going to do is I'm going to look and see what I can find out there. There's not going to be a lot. Like scarcity is thing. Anytime a real estate agent sends Mr. and Mrs. Savage 30 houses to look at, you're already dead in the water. Because if there's 30 available, they're going to be searching forever and nothing's ever good enough. But if I send Mr. and Mrs. Savage 6 houses and I say, Dave, I searched all throughout Newport Beach and there are about 5 to 7 houses that I think might meet your criteria. And I also throw in 2 or 3 crappy ones of the 5. There's only going to be 2 or 3 that really stand out. And I know that. And the reason I know that is I did a good job on discovery for what they're really looking for. And then I'm taking them to the worst house first. So they say no. So then I can say no. And you know what? We can find better out there too. Then we go to finally house number 3 or house number 4. They love it. I knew they would love it. And then we begin. But I'm setting that up when I'm setting the properties to say there's not going to be much to look at, but let me know which ones you like the best so I can then begin my tour. Everything begins on that initial call. Your initial application call, your initial call with a client will set up everything in terms of do they like you, which is the most important factor. Do they like you? That's all that really matters, is that you have a very good personality, you're credible, and they trust that you can help them out. If you can do those three things, they're not going to call somebody else. You got them until you can prove that you can't. But that initial call is everything. I mean, it is literally everything to set up the entire process of the entire transaction.
All right, guys. So we're in the closing minute. I put a link to Jason's book. If you guys have not already bought it and read it, get it today. Click on that. It's the best way to say thank you, Jason Mitchell, for the value you brought today. And I have a feeling for some of you, you should buy a case of those books and hand them out to your real estate agents and be able to teach people how to future-proof their business. Also, I put a link to the assessment, the Modern Mortgage IQ assessment. It's free. Just click on that link and it will tell you, where are you? Are you a level 5 modern mortgage professional? Also, you get a 10-day free trial. All the content from the Modern Mortgage Summit for the past 6 years is there. So Jason Mitchell has been one of our keynote speakers most of those years. Hopefully he'll say yes next year, and we'll have him as a speaker at the Modern Real Estate Summit. So guys, huge value. Let us know what you thought of today's call. Use those little reactions.
Go to the gathering, by the way. That event is awesome. Colorado Springs in June. Go meet people. The purpose of these conferences isn't necessarily the content. The purpose are the people. So that's a great event. If you guys can make it to the gathering.
Well, I do want to qualify it, guys. The gathering is mortgage executives and real estate executives only. So it's not a loan officer event. I don't think they'll even sell the ticket. No, it's a mortgage and real estate executives, but tell your executives to be there. Both Jason and I will be there. I'm actually I'm leading a panel, which I'm super excited about. Guys, Mastermind Summit, it's coming up. Vegas in June. I will be speaking there also, doing a keynote. And so for all the loan officers, the place to meet and connect in June is the Mastermind Summit. We'll put a link here. Also, if you go to savageinsights.com, I'll actually have links, for all this stuff. And make sure you're part of Savage Insider Club. It's a mobile club where, like this particular interview, I already heard like 2 or 3 clips. If you want to get the clips, if you want to get the insider information, sign up for Savage Insights. We'll have that at Savage Insider Club. Jason, anything else you want people to go to? What's the best place to follow you? Anything else you want to say in terms of how to connect with you outside of this?
Yeah, my Instagram, I'll just put it in. I'm not that good on social, unfortunately, but whatever. There's my Instagram.
I think you're pretty good.
I don't think so, but I have so much respect for the mortgage industry. You guys have the hardest job out of anybody when it comes to transacting. And, the really good ones always seem to rise to the top. But my respect for your industry, Dave, is significant. I mean, compared to unfortunately, like the real estate industry can be tarnished because there's just a lot of bad real estate agents out there. And I know there's a lot of not so good loan officers, but all in all, the loan officer space and the mortgage community and industry is exceptional. And I mean that truly. So thank you guys for taking the time to spend a little bit of time with me today.
Thank you, brother. This is a wrap, everybody. Take care.